This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This is a lecture about ethics. Be very clear that ethics will be in your exam. And it's a very easy way to get 6, 7, 8 marks if you follow our suggestions. In the exam, in the second question, there will be some ethical problem where the directors in some way are choosing to manipulate the financial statements. Why might they choose to manipulate? Well, you can see here, again, some of the reasons why directors choose to manipulate accounts. So these bullet points that you can see in the notes here again really help us to understand why directors might choose to manipulate the financial statements. They might have profit-related pay that only kicks in at a certain level. They may, of course, be close to insolvency when they will have promised the bank that their gearing ratio would not exceed, say, 60%. If the company is a financial institution, it may be that their balance sheet doesn't meet current banking regulations, so they don't want the regulator sticking their nose in. If they're planning to list the company or sell it, there's a perception, so IPO listing or disposal, there's a perception that they might, again, want to overstate the assets. Or, of course, sometimes they might just want to minimize their income tax liability. So these are all things that could cause the accounts to be manipulated. Perhaps in the scenario you get, one of them will be listed and you should mention it. Just say, in this scenario, the directors have a bonus. Perhaps that's why they're choosing to overstate the profit. There are many ways in which they can manipulate the accounts. In particular, of course, I'm just picking up some of the bullet points that are down here effectively again. They could exercise judgment. Think about the P word, provisions, and the A word, allowances. I know a company that changed the depreciable life of its PPE from 23 to 100 years. It's ridiculous. That was just a way of reducing depreciation and increasing the profit. Provisions for returns, things like that. If you're in a retail environment, could be understated. Allowance for bad debts could be understated. If they're having a major reorganization, again, they might understate redundancy liabilities. Lots of possibilities. If they are concerned about the bank, then they might window dress or dress up the balance sheet. They might show a current liability as a non-current liability. You might be saying, well, what are the auditors doing? Well, we'll talk about that in advanced auditing and assurance, but they might show a current liability as a non-current liability. Or, of course, they might book transactions inappropriately. Remember, the first thing you learned was debits and credits. And you learned that debits are either expenses or assets. So if a company has a big expense and debits asset instead, by mistake or deliberately, then their assets will go up and their profit will not go down. Credits I hope you remember, income or liabilities. So if I have a big bank loan, I should debit cash, credit loan. If I debit cash, credit revenue, my account's balance. You might say, how disgusting. It happens. You can see some of the other issues are mentioned there further down the page. I would probably be familiar with a couple of them, but companies do not want leases on their balance sheet. So they could pretend they're all short term. They don't want to write down their receivables because it would reduce profit. They would prefer to capitalize all expenses in PPE. They would prefer to say that research costs are development costs to push their profit up and their assets up. And they might also think about which method of goodwill would give them a better view in the accounts. I'm never sure whether that's really manipulation because that's actually allowed by the standard. But either way, there are many situations, of course, that will arise. If you look back at the question 2s, you will notice in the past exams, these situations are fairly transparent.